How strong is the bear case at the moment for $50 a barrel oil?
So the bear case for $50 oil is not that strong. And I'll say this up for two reasons. The first is $50 oil would essentially cause U.S. production to head into decline as opposed to increasing for the year. So that would massively impact the global supply and demand imbalances. And there's not much you can say to make producers produce oil for a loss, right? All the rhetoric in the world isn't going to make them say, you know what, we're going to pull this barrel out of the ground at $55 a barrel, but sell it for 50, right? So there's a buffer there, and I think that will kind of buffer the downside and protect us from 50. However, we should be very clear that $60 crude is definitely part of the conversation, and that's really around the fact supply won't decrease significantly between here and 60. We have a lot of demand concerns circulating, at least in the U.S., in terms of what's going to happen with tariffs and how that will impact global demand. And lastly, we have like kind of this supply that OPEC has decided to kind of bring on, albeit very slowly, starting in April, but represents a significant change in their policy from being very restrictive. So 50, I think, is an exaggeration in the conversation, but I do think there's real downside that the market is concerned about. And I think the bears are pretty convicted in terms of feeling that any rally, any significant rally that's based on geopolitical risk will be sold because the kind of supply and demand fundamentals, when they look in the back half of the year, look like we're going to see some builds.
Okay, so we're going to get to 60 more likely than we are to get to 50 on crude. I hear you. And Rebecca, this is really interesting because we had Treasury Secretary Bessent on a media blitz trying to explain what the Trump administration is trying to do. And, you know, the targets that they set out early on in the administration, right after inauguration, right, to get energy down, to get yields down, and to get dollar down, all three are actually happening. It's in the numbers, right? In the case of oil, we're off about, I think, 12, 13% since January 20th, right? But your point is good. It's not to do with any more supply coming out of the market. It's now because we're all worried about falling into a recession.
That's right. It's getting what you want, but for all the wrong reasons, right? And so we do have this reduction in crude oil prices, but it's not coming in the face of like, we've got U.S. production ramping up and we've got this good demand growth, but it's all being met with this wonderful U.S. supply. We have the commodity really facing some uncertainty on the demand side, which is, I believe, the more sensitive side of the supply-demand equation, right? The supply side, yes, we could lose some Iranian barrels. Yes, we could tighten sanctions on Russia and lose some barrels if the ceasefire talks fall apart. However, we've got spare capacity sitting in the Middle East of 5 million barrels that will buffer upside. On the demand side, if we start eroding demand, what are our buffers? You're going to refill the SPR. You don't have the budget necessarily for that, right? That's going to come from production decreases from U.S. producers, which, guess what? That hurts the U.S. economy. So it really is this kind of push and pull of saying we're winning by getting that lower price. But if you think of how we're getting there and what those implications are, it's not quite as pretty of a picture.
Rebecca, does that all add up to a surplus in the region of 1 million barrels a day plus for 2025, notwithstanding the geopolitics, if the Trump administration is now targeting Yemen and maximum pressure against Iran is still another outcome potentially?
I think a million barrel a day surplus in 25 is too high. So I think we're closer to seeing a surplus between 200,000 and 500,000 barrels a day in 2025. And because I really think some of the estimates that are out there in terms of what U.S. production will be, particularly on the Strip, are too high. We have had some efficiency problems from some of the producers that are supposed to grow, particularly Brazil. Canada also is supposed to be another area of growth, but they're not going to grow if all the crude that they need to export is now being tariffed and WCS is trading at a discount, right? So I think the surplus is closer to 200 to 500,000 barrels a day, and that's kind of under that assumption that demand doesn't crater, but it's close to 1 million barrels a day of demand growth, which is still very healthy. So this is not recession type of demand growth, and that supply growth kind of comes in around that 1.2. And we have a modest reduction in Iranian supply, not 1 million off of Iran. Maybe we lose 300,000 barrels.
Yes.
So those are kind of how those estimates shape. I do know that there are massive estimates out there, very bearish estimates for that big build. I think it's overdone. And I would also point out inventories globally are very low. They're well below five-year averages. We are not coming from a place where we have a massive bloated inventory stock,
Yes.
and that really does help us a little bit with smaller builds.